Hello, fellow traders. 'Tis I, the Rumpled One. It is Tuesday, September the 4th, the year 2018. Let's talk trading. Starting over. You can start over every day. You can start over every time you make a trade. I mean, it's a new trade. You can start over. It's kind of like Groundhog Day. You keep doing it over and over until you get it right. So starting over, a new month, September. Once again, I hope you had a really profitable August 2018. September. Now, I missed the first 2 days. Sunday, I was at the IndyCar race up in Portland, Oregon. Had a really good time. Good racing. In fact, the first race of the day were the Miatas. So those of you who've known me for a few years know how much I love driving Miatas. And in fact, I bought myself one, a 99 this year. Unfortunately, though, on the way back, the throwout bearing went out, so it's going to be up on the jack stands, and I'll be pulling the tranny and sticking in a whole new clutch and everything. So, and the bummer is, I wasn't racing it or abusing it. I just drove it, but it's an older one, and mechanical things have a tendency to wear out and break after a while. So anyway, I'll, put all new stuff in it, then I shouldn't have to worry about it. Anyway, starting over, trading. I think I said that I'm going to start looking at the euro yen, and I happened to notice today that the dollar yen really took off. So it's just like, do I really want to change? One thing that you can start over and do right each time is your money and risk management. Okay, why does it keep doing that to me? Yeah, so here we go, monthly. You can see here the dollar yen poked into that lower wick zone here the previous month and now is here. But we were going to start looking at the euro yen. The reason being is it seems to have a bigger range. So if you compare here, you see you've got 68. Well, I hit the wrong button. And you can see here the euro yen has 83 when you add these two numbers together. So let's see what happened. On the weekly, you can see there's some huge gaps here that haven't filled. And you can see here on the weekly dollar yen, I thought, oh, maybe it's this one that does them all. And we want the euro yen. We click on it. Yes, all of them have changed now. So you can see here we were in that lower weekly wick zone. We popped out and we're pretty much crossing above the top of the lower. Well, that's the daily. Crossing above the bottom of the previous week's candle right there. That's what's going on. We look at the daily. You can see here we shot out of that wick zone, almost exceeded the top here, but not quite. And now we are in the candle body here, crossing out of the upper daily wick zone. And once again, looking at the ranges, you can see here 1, 2, 3, 4, 5, 6, over 100, and 83. You can definitely bag some pips with an 83 pip range. And you can see here on the buy zone, right there, it went in, came back. You should have scratched that trade here. There was a trigger short right here. If you didn't get out the first time, right here, price action's telling you to take that the second time around. And then here, once again, you can see it shot out. And if you stayed in that trade, once again, right here, price action, failure to make a new high, starts to pull back, you're out. Here is a short, nice profit, and we came back. And you can see here the rat zone, we put in a low here. We had a rat reversal right here, getting in. And you can see here it came all the way back up. That's good for about 33, 43 pips. 9 minus 5 is 4. 4 minus 1 is 3. 43 pips. Zone to zone. A nice trade for the rat zone traders. And we can see here, once again, that pivot was covered. But let's take a look here at the euro yen since we haven't been looking at it. Okay, we've got 2 open pivots from the month of August. One here and one here. You can see here on this day, it took it a couple of days, but that pivot got covered. So will we hit 127.30 or 129.91? So we've got those, but for the other year, we only had 2. I believe the yen had 3, if I'm not mistaken. Oh, we can look real quick. No, the yen had 4. You can see here, this pivot got taken out, so we're still looking at this one to be taken out. And price action, as you can see, pretty much the same thing happens on this, on the euro yen. 2 ball at the top, red at the line, 3 ball at the bottom, green at the line, and we got a 1 ball at the top, so we're now going to look for red at the line. So I think there was a trader that said they've been having much success using this setup, and there was also a trader that told me they really like the wick zones, and I think one of them posted a chart. And you can see here, price at the line, H1 candle color at the line using the previous day's line. This one here, I see you got green at the line. Now, one thing, I don't mention it every day, but I've mentioned it before. When you're looking at these trades, you want to catch it at the first line. So see here, you got short here. You know, if you come late to the game and it's already crossed that line, it's usually a better idea to wait and catch the next line. So here it went up. You can see here there was some hesitation there. Or if you start it here, you go there. You know, right there, that almost looks like a scratch trade or small profit. But then here, if you were lucky enough to catch this green at the line, you could have ridden it the entire way. Or you might have scratched the trade, taken some profit here. You were lucky enough to get in the trade. This hour, you see there was a nice profit, or just in the past few hours, you see it went there. If you caught it there, you got the reversal. Nice turn trade, nice continuation. See, all of those work on different time frames. I've been talking about the turn trades. You know, at the bottom, you see red, green, take that continuation, red, green at the bottom. You know, once again, it's telling you, because for this run to have happened, it's always going to be at the bottom a red and a green. And for the coming back down, you got a green and a red. You can see here, didn't even hit the midpoint. You take that south continuation to the downside. So you see something happen. You see this at the top, look for the short. You see this at the bottom, you look for the long. Okay? It's really simple. All you have to be able to do is distinguish between the candle colors, right? Okay. See, starting over, we'll talk about some of these fundamental things, the basics, and we'll just use them to our advantages. We've got the wick zone. price doesn't like staying in the wick zone, so it was in and out, in and out, in and out, you know, in and out, in and out. Now it's back in, looking to come out one end or the other. The holo, here you had a highest open here. It came down, came back up, gave you a couple of opportunities to catch the short. On the long, you just had to basically take a chance. It was bouncing off of that, see if there was anything, any reason for it to come back. You jump in, you take your chances. Would have been about a, what, 10, 11 pip stop loss. Not a bad, you know, for those who like to talk about risk rewards, there's a nice one right there. Inventory reduction bar. Okay, you can see here a bunch of crisscrossing. Finally, though, you've got a short here. Paid off nicely. You know, there was a long trigger here, paying off. Now we've come back. We've got a new long and a new short. See which way it breaks there. Both of these on the 15-minute. Looking at the previous weeks, daily, weekly, monthly, open, high, low. Yeah, previous daily, weekly, monthly lines for the open, high, low. And you can see here, once again, we're using the H1 candle color. And, you know, these lines right here is a previous daily open, previous daily low, previous weekly low. You can see taking candle color at these lines once again proved to be profitable. And not much action on the tick chart at the moment. Einstein line, you can see here, there's a couple pips to be made. Nothing super fantastic. So it's a new month. You can start over. You could start over with a new method. You could start over with the same method, just saying that, hey, you're going to do it better this time around. You're not going to make the mistakes that you made last month. You're going to avoid them. You're going to learn from them. You're going to clear the board, clear your head, and start over. There's nothing wrong with that. In fact, I recommend it. You can do it on a daily basis. You sit down, it's a new session. Unless you have open trades, clear mind, forget about the past, focus in the moment, and basically trade what you see. I mean, that's one of the things I used to tell people. Oh, you have to trade what you see. If you can't see it, you can't trade it. Because remember, fellow traders, it's not what you trade, it's how you trade it. So let's get out there and have a really good September of draining the banks.